Good morning, this is Kian from CryptoBoost. Really happy to have you here with me today on the 24th of July 2019. I've got a few interesting articles I want to share with you. First, we're going to be looking at Bitcoin medium and long-term outlook, where we could be going. There's a few interesting signals I want to share with you. Furthermore, some altcoins we'll be looking at, Binance Coin, EOS, and a few more, what their outlook is and if they're going to suffer a lot due to the Bitcoin dominance. Then we're going to be looking at the Indian government and their outlook on cryptocurrency, what they have in stake, what they want to do. Furthermore, the New York Times is using hyperledger to combat fake news. And last but not least, we'll be looking at a few tips on safeguarding your funds. So without further ado, I want to get started in this video. Hope you enjoy. So Bitcoin at $9,600 has had a bit of a pullback in the last few days. I've been mentioning that, and yeah, it's possible that it sinks even further. So however, now we're going to be mostly looking at medium and long-term outlook and market signals and what they have in stock for us. So Bitcoin sees bull market signs. So despite the fact that Bitcoin has just slipped under $10,000 for the uptimes time in only a few weeks, the cryptocurrency recently saw yet another bullish indicator come to fruition. So ROE Bitcoin, a popular Bitcoin personality on Twitter, points out this indicator is the US dollar value of the coins sent in one day passing above the peak of the previous bubble. So basically the amount of transactions calculated in US dollars, and that's for him a very important indicator. So the current amount sent in USD passing the amount sent in USD during the peak of the last bubble has been an indicator for a few bull markets. So here we've got a nice chart, and this is the Bitcoin sent in US dollars historical chart, and as you can see, it's correlating nicely with the last bull market. So end of 2017, we had a very high peak. So that would be here. We had a nice peak of BTC sent in US dollar valuation, and afterwards at the end of 2017 we had the bull market. So basically, if we read this chart correctly, his hypothesis is that since now we reached the same high level as we did in transactions as at the beginning of 2017 or mid 2017, his hypothesis is that a bull market is around the corner in the next year. So however, I think it's important to note that previous occurrences in the market is not an indication that it will happen again the same way. I mean, it's a fallacy. I think you always have to take these indicators looking at previous occurrences with a pinch of salt, because they're not as accurate as people like to believe. However, that's not the only sign that a bull run is on the horizon, as pointed out by analyst CL207, a little known yet astute cryptocurrency commentator. BTC recently crossed above the 1.25 standard deviation above the 50-week simple moving average. So moving average is you take the candles for a certain amount of candles. So for example, the 50-week simple moving average takes 50 weekly candles and average them, and that makes a line. And here he's got a nice chart showing this 50-week moving average, and the standard deviation is basically the amount that it's above or underneath this line. So here he's got, for example, on that's I think around August 2011, there's a bearish confirmation, and in August 2012 there's a bullish confirmation where the chart goes above the blue line, as you can see here. Now it happens on several occurrences. So here again we've got it in for the 2014 bull run, we've got the bearish confirmation here, and then again later on, around 1.5 years later, we've got the bullish confirmation where the price rises above the 50-week simple moving average. Now, here we've got the 2017 bear market where the price goes below the 50-week moving average, and here at 10,227 US dollars we've got a bullish confirmation with the price going above the 50-week simple moving average. However, what you have to realize is that it doesn't mean that the price is always going to be going up. So it's possible that the price, as we've seen now in the last few days, the price can dip back below, touch the 50-week simple moving average. It can also go higher, go lower. It doesn't just rise parabolically all the time. You've got a move up, then a bit of a move down, and a move up and a bit of a move down, as you've seen here. For example, here you can see it is retesting the 50-week moving average on multiple occasions. So it's possible that should we retouch the 50-week moving average again, that's a very good buying signal, and that would be at around 8,500 US dollar range, where we've got a very strong support, as I mentioned in the last video. So now, once this occurred during the last bull run, BTC rallied for over 15 months straight, shooting past new highs. However, it's not all sunshine and rainbow, even though it's important to point out these indicators don't simply imply Bitcoin will rally higher consistently with no pullback. So realize that when you've got a large spike up, you're always going to have a correction. That's with all markets, especially with cryptocurrency markets, as they're pretty volatile. They will have tremendous parabolical rises, for example the one that we had up to 14,000 US dollars, which will often be matched with a correction for probably around 40-50% correction. At the moment I think we've got a 40% correction already. So you see in the short term, a number of analysts are expecting for BTC to scale back further, as the rally to 14,000 US dollars has deemed by many too far, too quick. So unsustainable, in other words. So now it is very good. I think in the long term I'm very, very bullish, and to be honest, for me, I don't worry too much if the price goes down to 5,000 or 3,000. For me, I see that more as an opportunity, but yeah, just that's because I like to use a weighted dollar cost average method. That means the lower the price goes, the more money I put into the market, and yeah, that just works for me personally. Not financial advice. Let's continue. Now we've got Binance Coin, Stellar could resume and EOS could resume their upward trend despite growing Bitcoin dominance. So in the last video mentioned Bitcoin and altcoin dominance and when the altcoin market could happen. Now I think what's very important is to diversify your portfolio. Even if the altcoin market is not happening anytime soon, the prices in SAT valuation is very low for many of the altcoins, so probably also good possibilities to getting some altcoins pretty cheap. So while altcoins continue dropping, Bitcoin has increased its dominance over the market, reaching 68% for the first time since early 2017. Some prominent members of the industry even predict that BTC will capture 80% of the market. This technical analysis will evaluate whether Binance Coin, EOS and Stellar have the potential to rebound despite the larger market. So Binance Coin, I'm pretty impressed with how Binance Coin managed to trade in the last few months. It's been very good, very profitable. So it managed to trade above the 7-week moving average for over 6 months, invalidating all the bearish signals along the way. So Binance Coin, if you would have bought at the beginning of the year, you've been very profitable indeed. So nonetheless, the latest sell signal given by the TD sequential indicator by the form of a green 9 in mid-June could not be invalidated. Since then, BNB has corrected nearly 39%, breaking below the 7-week moving average for the first time since late December. So if you've thought or felt like you missed the BNB boat, maybe now's a good time. So far, the selling pressure behind this cryptocurrency has not been strong enough to take it down to the 30 or 50 week moving average. Additionally, last week a hammer candle pattern developed. This is a reversal candlestick formation that signals potential capitulation by sellers and a turnaround in the price direction. However, I think that BNB has got a very good utility use case for the Binance platform, especially now that they're rolling out their margin trading. I think even though we might have a bit of a correction due to the fact that the exponential rise was due to a lot of speculation and FOMO, this this correction is healthy and probably also a good entry point at one of the moving averages. So here we've got the 7-month average, which it went below. It got rejected, as you can see here with the 3. Now what I'd like to see is maybe a touch of the 30 moving average, which is the blue line. Yeah, a touch of the 30 moving average would be for me a very interesting entry point. But yeah, that's yeah, I think that would be good. That would be nice. So if BNB is indeed on its way to new yearly highs, the Fibonacci retracement indicator could help identify the different price points that could act as barriers due to high levels of supply around them. That's breaking above the 23.6% Fibonacci retracement area that sits around 31.2 US dollars could pave the way for Binance Coin to try to retest the next levels of resistance of $33 and $39. However, yeah, it would be nice to see BNB maybe touch a 22.5 US dollars before going back higher and trying to test new highs. But probably buying in setting buy orders at different price points will get you the best average lowest price instead of just going all in at one price point. A type of dollar cost averaging, if in other words. Alright, EOS following the 458% upswing that started in early December 2018, EOS retraced nearly 62% after peaking at $8.65 on May 31st. Now that has reached 65% Fibonacci retracement level on the 1-week chart. A hammer candlestick pattern seemed to have been developed last week, signaling a potential reversal. Yeah, so $4 at the moment, and yeah, this is a very bullish. You see this? It's got a very long wick at the bottom. This very long wick is an indication that there's a very high amount of buying pressure at this price level, which is a pretty good buy indicator or reversal indicator that the price is going to go back upwards. I think the $4 is a pretty good price. You can maybe try and look and see if you can get it below $4, and yeah, as long as you don't have all eggs in one basket, I think trying to find good entry points for different cryptocurrencies should they plummet is always a good idea, especially if it's part of the top 10, part of top 20 cryptocurrencies on CoinMarketCap or CoinCheckup. Last but not least, we've got Stellar Coin. Let's see where it is. It's here. Stellar has not had a great year in terms of price action due to the extreme volatility that has gone through after the low of February 6, 2019, when Stellar reached 0.073. It experienced a 3-month bull rally that took it up to the 16 cents range on the 16th of May, representing a 120% price increase. So despite the significant pullback that Stellar experienced, now seems like a bullish spinning top candlestick formed last week, signaling a potential upward move. So here again we've got a pretty nice spinning top with the wick at the bottom and the wick at the top is indication that the market is a bit unsure at the moment. However, when this is at the bottom of a downtrend, that it's normally, it's not a very strong indication of a reversal, but it's not bad. I think you have to look at other indicators to see if you want to enter at that price point. But yeah, Nonetheless, a double bottom pattern seems to be developing on the 3-day chart. So double bottom is pretty strong. So here we've got one on March, and here right now in July. And that the double bottom pattern is definitely a much stronger indicator than the spinning top. So in addition to a buy signal has been given by TD sequential indicator in the form of a red 9, adding credibility to the reversal pattern. So yeah, that would be these two lines. White lines would indicate the double bottom, and a potential reversal would happen here. Oh yeah, well, guess we'll have to see what happens. So that was it for these 3 altcoins that we looked at. Next up, a little bit more on the political side, and that's the Indian government committee recommends total ban on private cryptocurrencies. Interesting. An Indian Interministerial Committee (IMC) has recently suggested a blanket ban on all privacy-centric cryptocurrencies in the country. The report notes with serious concern the mushrooming of cryptocurrencies, warning that numerous people in India investing in digital assets that are almost invariably issued abroad. As such, the report concluded that said cryptocurrencies have been created by non-sovereigns and are in a sense entirely private enterprises. So Indian government to consider cryptocurrency prohibition. The IMC asserts that there is no underlying intrinsic value of these private cryptocurrencies, adding that such all the attributes of a currency. The report also expressed concerns regarding the price volatility of cryptocurrencies, stating there is no fixed nominal value of these private cryptocurrencies, yet neither act as any store of value, nor they are a medium of exchange. So the committee is of the clear view that the private cryptocurrencies should not be allowed to. They mean with private cryptocurrencies, all the cryptocurrencies, since basically they're issued from abroad. Probably they mean like anything from Bitcoin, Ethereum, Bitcoin Cash, EOS, XRP. For them, that's private cryptocurrencies. I want to go back on a few things that they said, because I don't agree at all with a few of their statements. So for example, the report also expressed a concern the price of cryptocurrencies regarding the volatility of cryptocurrencies. And I think, of course, at the moment cryptocurrencies are very volatile, but that's understandable since the market cap of the whole cryptocurrency market cap is extremely low, and since it's so low, any buying and selling causes a high amount of volatility, and this is a normal thing to happen in a very young market. I mean, you have to think, if you look at the whole cryptocurrency market cap, it's maybe placed at the 27th or 28th position if you look at all the companies in the world, the biggest companies in the world in terms of market capitalization. Then the cryptocurrency market is on the 28th place, so it's still extremely small, which is just normal for this market. And I think this is a very weak argument to say that the cryptocurrency market is bad because of the high volatility. It's just the growing pains of a market. So I think that's an important aspect to look at. The other thing that they're saying is there is no fixed, where is it here, there's no fixed nominal value of these private cryptocurrencies, neither act as any store of value, nor are they a medium of exchange. Now the thing is, they're not comparing it with anything else, they're comparing it probably with fiat. And there, I mean, it's basically the same thing. So you've got fiat currencies not backed with anything. They're pegged to a nominal amount that the government says, and yeah, you can just print as many as you want. So in the end, the value that the cryptocurrencies offer, especially if you're looking at some of the top coins, is the fact that it's limited amount. You can't just go on and print as many as you want. it's a decentralized nature, so no one can tell you how you can spend your cryptocurrencies, to who you can send them to. And for me, that's a very important value aspect. Now, the fact is, with fiat, people can just, the governments can print more. They lose value, so fiat currencies are not a store of value like gold. They're more a currency of a way of sending value, but they do not store value, because most fiat currencies have a lifespan of around 150 years. So, but it's understandable that they don't like the idea, because cryptocurrencies are a massive threat for most fiat currencies in the long run, since no one wants to have such high inflation, and they prefer to buy something that is a store of value and not have something that constantly loses in value. So you're not only losing the value through the inflation, you're also losing value through negative interest rates on the banks. So all in all, it's not a very good view, but most people don't understand that much about fiat currencies and the monetary policies that the banks impose on the population. So I think many people still believe that money is backed by gold. But yeah, I guess I guess it's unfortunate that not so many people know that much about it. But probably the more people are become aware of how bad the situation is for fiat currencies, then they start opening their eyes and realizing in what great problems we are going to run into in the next few years in terms of financial crisis and inflation and whatnot. So I'll stop rambling and continue with the article. So industry representatives speak out against crypto ban. Satvik Vishwanath, the co-founder of Indian cryptocurrency exchange Unicoin, warned that the recommended cryptocurrency prohibition as drastic, and warned that the policy would be to the detriment of India's technology sector. So I think he's got a very good comeback on that, and I think that's a very good point he's making. So I think this is totally true. So if you try and stand in the way of cryptocurrency adoption, then you're just going to be harming your own country. You're going to be staying behind. And it's like, I like to use this metaphor that I've used in a few other videos, and that's with the massive wave. So you can either try and ride the wave or be part of it or look at it. But if you try and stand in front of the wave, then it's going to engulf you. You're not going to manage and stop it. It's better to just maybe look from the side if that's what you're into. But standing in front of the wave, trying to stop it with a firm no, is going to be tough one to pull off. But yeah, let's see. At the moment, they've not made any decisions yet, so I think at the most things it's still in discussion. But I think, should they bring any bans, it's very definitely going to be very detrimental for their financial and technological sectors. Alright, so fake news, I think that's a big problem. I like the idea that it's going to be fought against with hyperledger. So the New York Times using hyperledger fabric to fight fake news. So the paper of record, the New York Times, is using the hyperledger fabric permissioned blockchain to guarantee the governance of digital files. According to a new website for New York Times News Provenance Project, the newspaper will use blockchain technology to fight misinformation in the media. The project's purported aim is to provide a platform that is widely applicable to variously sized publications. And here the site states, our initial work involves exploring a blockchain-based system for recording and sharing metadata about media, images and videos in particular, published by news organizations. We are also conducting user experience research to identify the types of signals that can aid users in recognizing authentic media. I think this is very good. In the cryptocurrency space, that's a big problem that we experience. many news sites, I think their goal is to spread fake news, fake information in order to profit from the market, because the cryptocurrency market is highly reactive to fake news, to good news, to FOMO news, to FUD, whatever. And the fact that is when an article like this comes out, very often the market reacts drastically in the way that a coin loses maybe 5, 10, 20% in price. And we've just seen that recently with Tron losing around 20% in valuation, due to not only the first one was about Justin Sun not going or postponing the lunch with Warren Buffett, and the second one was with the false allegations that he's in captivity in China and so on. But I've got another article, we'll be talking that in the next video, talking about Justin Sun and all that story. So, but the thing is, the point I'm trying to make is that you got so many articles, they come out and the FUD causes a reaction in the market. People react to this news and maybe sell their coins, and this is a catalyst reaction. In the end, yeah, I think it's terrible that this happens before the news can be fact checked. So if there's a way of figuring out that the news articles have a good source, are reliable, I think that can help a lot, especially in the cryptocurrency market. So, all hype aside, blockchain offers mechanisms for sharing information between entities in ways we think are essential for establishing and maintaining provenance of digital files. So if you can say where the source is from, then it offers a much higher level of transparency and credibility. So I think this is very good. Looking forward to a proof, to seeing when they can roll something out that is usable, to find if the source is correct or not. Alright, last but not least on the list, and that's safeguarding your funds in the cryptocurrency space. And it's very important to secure your funds against cryptocurrency theft. And yeah, it's a big problem, to say the least. It's never too early to be vigilant about security of your crypto digital assets. Crypto theft exists for a reason. It is arguably the most profitable and hardly traceable assets due to the nature of blockchain. Malicious attempts to get hold of your digital assets might look legitimate at some point, but they are easy to spot if you pay extra attention. So there are common scams you have to watch out for. And I think if you've got a sense of awareness, as soon as information is asked from you, that alarm bells should be popping up in your head, then you're going to be a lot more secure in the cryptocurrency space. So the first one on the list is phishing emails. So basically emails pretending to be from an organization that you trust. It could be from Coinbase, from Binance and so on, asking for valuable information from you. It could be asking for your email passwords, it could be asking for identity documents, it could be asking for you for help on securing funds, and so on. So the oldest phishing method is with fake websites, and they try and steal your data, your password information, your two-factor authentication information. They've got phishing websites that also try and steal that. So always make sure that you check the websites that you're going on to. Maybe don't type them in, don't Google the website and click on the first result. Maybe bookmark different websites that you use often, like Binance, bookmark it. And because there's been cases where hackers use advertising to promote phishing websites. So the thing is, if you would Google Binance, it happens that phishing websites were the first to pop up as an advert, which is unfortunate, but you have to be careful about that. So bookmark the websites that you like. There are different tools you can install to that. Check the validity of websites. Make sure it's also using HTTPS and there's a secure connection. Alright, so Now, phishing website, that comes in the same category. So phishing emails basically is just sending you an email with all the information, and phishing website is with the fake websites where you can put where they ask you to put all your information, and they use that information to steal your stuns. So now there's also a phishing attack in the crypto world. A lot of websites ask traders to check the URL bar for the correct SSL certificate and URL before logging in, but it doesn't guarantee that the website is safe, as hackers have also evolved. When users leak their login details on phishing websites, hackers can then use APIs to withdraw funds or perform abnormal trades or steal users' assets if a user is under a phishing attack. So yeah, there's also be careful when using APIs also from other websites. Make sure you know which websites you're granting API access, because if the website is not safe, then hackers can use these API keys to also steal your funds. Now, impersonating officials, this is a type of social engineering attack, and it can happen on Telegram, Twitter, and so on, where people will pretend to be Binance official or Coinbase official, and they'll try and help you and be nice to you and kind to you and ask for information about your account, so that they can basically they can social engineer Binance in making Binance believe that they are you. So make sure that you always go through official ways and not just responding to make-believe official pretending to be a Binance employee on Twitter or Telegram. So don't believe people that just because they say they are one thing. Very often that's not the case, and if someone is too helpful, then that should ring bells. Alright, so now how to effectively protect your assets. A very easy way is, first of all, as soon as people ask for identifying information such as ID cards, passwords, photos, and so on, then bells should be ringing, and you have to think, why does that person actually need it? Do I have to send these information? Very often, like websites like Binance, will not just ask for this information just like that, and especially not in a unprofessional way. Now, make sure you have two-factor authentication. That's an app. You've got Authy or Google Authenticate. You can Google that. Those are very useful tools to make sure that your assets are safe that they're just safe. Last but not least is you can use a hardware wallet, and I think if you've got a lot of funds, that's definitely a must to have. So you've got the Trezor, you've got the Nano Ledger S, you've got many you can use paper wallets and so on. And I think if you're in it for the long term, you don't intend on trading medium term or short term trading, and you just want to keep the funds for maybe 5 years, make sure you put it on a Ledger, a Trezor hardware wallet, and make sure that you keep the keys safe. Write them down, put them in multiple places where no one finds them, but make sure you can still find them. And I think that's the safest way to go, especially if you've got several thousand francs, several 10,000, 100,000 US dollars in cryptocurrency assets. You don't want them to just stay on Binance, on Coinbase, since if you don't have the keys to these coins, then technically they're not your coins, and you don't have and it defeats the whole principle of cryptocurrencies as a whole if you cannot access your own cryptocurrency assets. So that was it for today. I hope you enjoyed this video, and I'll catch you in the next one. Have a nice one. Bye bye.